Right,
down.
Robert.
Yes.
Sales don't seem to be off as much as they are, but when you emailed me this morning, you said it's dropped by 30%. How did you come up with that number?
Well, I was trying to remember from what the last time I'd done it, and I think it was about 27, 28%. So the sales came in at 71 something or other, rather than 68 something or other. And so it's 24 to 26, depending on whether you use the 4 year, because we're not counting 2020. It was so goofy a year, or the 10 year. So it's 25% off, not 30.
Oh, so you're telling me you didn't just use last year's sales as a benchmark and say, hey, it just dropped by 4 or 5%?
Well, that's too skinny a slice of time. The Treb has done that using their seasonally adjusted 1 year and benchmark 1 year and by month. And, you can't compare March to April. It's just a different month every year.
Well, then on this episode of Real Estate Chat with
John Perez.
and Robert Eid, we're going to dissect the recent report of April 2024 and how it looked in the market. And in a nutshell, according to Treb, sales dipped a little bit. We're going to kind of decipher what that really means. Now, active listings jumped huge to the tune of about 47-ish%. Robert's going to go into that in a bit. Meanwhile, prices are flat and just moving along. Let's jump into these charts, Robert, and you
Okay.
can get right into it.
Okay. So this is the regular simplified calendar year where we can see the big up for 2021. We can see the big down in 2020, and the other things going through the middle. We have just experienced the 22nd best April. Now, that means it's below average, and it means it's the same as we've seen for the best part of 18 months. Very slow sales compared to the 10 year, but that was a boom. We're not in a boom. We got to acknowledge the boom, and then it's monitored or moderated by the fact that there's so few listings. And so that's why our ratios come out the way they are. That we're 26% off the 4 year average because we don't count that trough that came in 2020. And 24% off the 10 year and 47, let's call it 50% off the maximum April, which was in 2021. And we're 5% off, 6% off last year. So also trying to pick a hot market, which I'm going to say is 2011 with 9,000 sales. We're 21% off that. We're experiencing the same kind of a dull, but not unspectacular real estate market for sales. And sales is one very important component. The other one is listings. And the other one, which we'll get into, is relists when the board finally gets around to announcing.
Also, a couple of interesting perspectives here is when you look at perspective and you look at best months, best Aprils, and you're looking at a drop of 47% off best Aprils versus when the board compares it simply on a year over year or a month to month basis, it does change your perspective. But Robert, wouldn't it be fair to say then that, you know, well, I guess let me phrase it as a question. For the sake of the confidence of buyers and sellers, what would it have to take for sales to come up? Like, I mean, we've seen articles that say that buyers are waiting on the sidelines for rates to come down.
Yep.
We've talked about when rates are going down, but they're getting pushed again to now summer, and who knows if that'll even happen.
There
So
you go.
all of the naysayers who have liked and subscribed to Real Estate Chat and have always pointed out to us that, hey, no, rates are not going to drop. Looks like you're becoming more and more right as time goes on. But Robert, when will sales eventually go back to a level of confidence that buyers and sellers have been accustomed to?
Okay. It's every single sale is almost at the highest price ever achieved. Okay. When you're talking about the whole blend of when you have sales off by 25% and listings off by 30%, you've still got an intensity of competition in each one of the markets. I just had a deal in Bowmanville. I didn't even know where Bowmanville was 6 months ago, but it's hot, hot, hot out there. Two-bedroom bungalows with family rooms are getting $1 million. Why? Because empty nesters are selling $2 million to go out there to get everything on one level, including the laundry room. So it's still very, very intense. And we've just finished off a time where everyone was underlisting it. And so there was 5 offers on everything. Very, very competitive, very frustrating for buyers. Well, first of all, it's going to calm down like the summer normally does. And so that people will stop doing this low list nonsense. They'll put it on at the price they want. Like this new thing that's come out, open, or whatever they call it, with a buy now stolen straight from eBay. That's what the list price used to be. You put it on the number, you hit the number, you got the house.
Right.
So let's hope for a return to how the traditional real estate business has been carried on. All
Right.
the stuff that's come out recently about you got to do this and you got to do that, and the lawsuits in the United States are where people in a boom as buyers were abused by registrants who were just being greedy, and that's all it comes down to. Double ending was just too much of a temptation, and when they got away with it for 5 years, they thought that was standard practice.
There you
So
go.
I don't know whether that answers your question, but that's
Okay, well, sales will still happen. All-time high prices or record prices. People need to move. That's the
well,
simple
this is the
part.
thing. That's why prices are not going down, is because there's not a glut of homes. Until there's a glut of homes, prices will not go down. And when interest rates go down 2%, but it's going to take 2 years, maybe some of the people will be drawn off the sidelines. So if you're
Well,
a buyer,
we're gonna
you
look
can
at
wait
that.
or you can anticipate. We'll look at that.
We'll look at that in active listings and also the relist report if we ever get to it. So,
Yep.
school year perspective.
Okay, this is only to show that we just come off the low point in December, January, and we're coming up right along, scraping along the bottom of the 29 years that we're surveying since 1996. We are right near the bottom. This is in every single year. It starts at '01. So it's not a fantastic sales year, but the trick is if the sales aren't there, but the prices are not falling, something is happening. So the key is who are not listing. It's the same chart we just saw, except turned sideways.
Yeah, different perspective, different look at it from this school year point of view, but
Mhm.
showing the same thing. But now let's look at, we've always talked
Okay.
about, well, for those who have watched our previous episodes, you've seen us discussing what will prices do this year. And now that what is it? We're in the second quarter, but almost like, I mean, at this point, we're halfway into the year practically. June is right around the corner, skirting the previous year's prices. So we seem to see that continue, Robert.
Yeah, we're following the trend and also the phenomenon that happened last spring where sales rallied based on an anticipation that rates were going to come down, and then it happened again this year. And so the big story, as I just said, is that prices did not fall on average. Individual properties price did not fall. Sales were where they've been for the last 18 months, about 25% off what we've thought was normal as 10-year average. So if you look up in the yellow in the top corner for prices, it's the second highest April, as you can see there. We're almost 8% off the maximum April, which was the same number from 2 years ago. 1 year ago, we're down 0.25%, nothing to talk about. The market peak February 22, we're off, it's called 13.5%. The highest price in the last 12 months was May of last year, so we're off by 3%. And change from the month before is plus 3%. So we're muddling along. We're muddling along, but that means we're not falling.
Well, so that's the interesting part is that the news again, buyers waiting on sidelines for rates to drop. What are you waiting for? Like, are you waiting for prices to drop when rates drop? Because that won't happen. Are you waiting for inventory to increase? And it's not on me and Robert to tell you, hey, go buy now. That's up to you guys. I mean, our narrative has always been do what's right for you, make the right decision, do your research, speak with the right people. But for the educated, who are watching this, when you think of the logic of wait till rates drop, once rates do drop, and we talked
It'll
about
be
this
too, it'll be too late. The bottom will have
yeah,
long
we talked
passed.
about this in our office meeting yesterday.
Yeah.
It's a herd mentality. By then, you won't have the competitive advantage. You know, we first of all, we have to agree that rates will drop at some point. When? Now it's a matter of time. But when it does, naturally, everybody comes into the market. And Robert, what happens when everybody goes into the market?
Well, then prices go up again. So nobody is that smart. I've got a thing we'll get to at the very end. Pundits were saying rates are going to drop, and the public believed them just like the year before. And real estate sales representatives also believed it and said rates are going to drop, so you might as well buy now because they had a third quarter and fourth quarter last year lousy. And so when all of a sudden the inventory sold off over Christmas, New Year's, January the 15th came, they said it's another rally just like last year. And then it took a little while and they're disappointed again because it was a false rally, just like it was a false rally last year. The whole trick is it's going to come down a point. Interest rates are going to come down a point, but it needs to come down 2 points, but we're never going back to um, too low for too long. That was the problem in the United States. It was the problem here. We should have come down to three. We should never have come down to 0.25% and 1% for first mortgages. So we can't go back home again. It's the prices are not going to fall until we have a calamity. So if you're waiting on the sidelines for a calamity, I hope you're not right because I don't want a calamity.
Well, that's the thing, right? It's nobody's wishing for a calamity. Nobody's wishing for any. I mean, the only way prices would be negatively impacted, as Robert said, is because of that. And so, if you are on the sidelines waiting for prices to drop, that's your reasoning, I guess. That's your logic. If you're waiting for rates to go up and that's why you're not buying, well, I don't know. I don't know how much.
There's always somebody that has a reason for doing nothing. Sometimes
Yeah,
they're right, sometimes they're wrong.
yeah.
Many
And
times,
now,
if they have delayed all this time, then they're wrong.
and another price discussion is, are prices logical? Does this make sense? And we see on the YouTube, on the TikTok, Instagram, all of these social media channels, Facebook, whatever, Twitter X, we see the comparisons between, oh, here's a house in Canada, here's a house in the United States, or here's a house somewhere else. And so I guess the price discussion, Robert, of logic of, does a $1 million Bowmanville house make sense today, despite the interest rates have gone from 1% to like 5, 6%? Does that make sense? Is a whole different discussion than should you enter the market or not? Because, and this is where real advice comes in. Robert, correct me if I'm wrong. If affordability is your issue right now, you're a renter right now, you can't afford. I don't foresee that changing unless some drastic government measures, and we've seen how government measures over the past years, we've been talking about it, have not really helped what's happening with real estate here. If renting is renting, that's your thing. If relocating to another part of the country or relocating to another country altogether is what gets you into housing, then that's your thing. I guess Robert, the thing I want to ask you is that
Yeah.
do we accept the prices the way they are, as it is what it is at this point?
Prices will come down when there's no demand. If Toronto is the financial, social, entertainment, economic engine for Canada, it's going to have the highest prices in Canada. Vancouver was higher for a while because it was the immigration center from the Far East of Canada. But that's an entirely different thing. You look at prices in Nova Scotia, apart from the outflow of Torontonians that went down there and bid prices up. You go to Bancroft, you go to the Manitoba, prices are very cheap, but you can only get the good job in Toronto. So that's the conundrum. How are we going to do it? And the affordability question, which we said 100 times, is a function of price, which is high, interest rates, which are moderate but not dirt low, and incomes, which are trailing. So we had an adjustment going through with the COVID crazy lockdown that was incomplete, imperfect, and filled with speculators who bought all these condos, bought all these pre-sale uh, detached and semi and whatever's that they were just going to flip. They never intended to occupy them. So that's going to work its way out. It might take 5 years. We won't get out of the price is too high affordability problem until inflation, believe it or not, inflation floats up wages and floats up without floating up the prices. I can remember in the late 70s, a guy saying to me, how come my house is only 2% more than it was 5 years when I bought it, and inflation is 9% a year? I just don't get it. So some things are beyond our ken. Some things are just beyond our life. But if you live in Toronto, the prices are going to be high. Your wages are going to be high. You couldn't make this much money if you lived anywhere else.
And it's the vote of confidence, right? So I've always said that the price is a vote of confidence in terms of how you feel or how the general population feels about it. And yes, we can gripe about, okay, the specs drove up the prices, cheap money for a long time drove up the prices, etc.
But it
The
did.
fact that there was like 7,000 plus sales or whatever the number happens to be this month, next month, whatever it is, is that that means that there are 14,000 people who agreed upon, because there's two ends to these transactions, there's 14,000 parties that agreed that, yeah, this is the trading price of real estate here in the Greater Toronto at this point. Again, it's not up to sell it to you. You have to decide. Does this make sense for me? Do I feel that the value is right, or do I disagree with it?
Okay, here's another look at price, which is shows more clearly that we're following last year's pattern. And the line red above that is the 2021, which we're not going to see again. This is showing the 2-year change, 3-year change. And so that seems to be the pattern. We wondered whether we are going to fill the gap between the last year's price and the 2 years ago price, but we're not. We're just tracing along, tracing along. So again, it's still over $1 million, 11 something. Um, not falling, not falling. And as you just said, 7,000 people decided to buy and sell. If it's so terrible, what's wrong with that? Okay, here we go. Inventory, which we were sort of anticipating all the way through. Inventory is up, it looks on this chart, until you look at the 16-year average. Then we're only 6% above the 16-year average. Now, this is active. I had it at 17 and change, maybe only 300 or so more than what this is, and they reported a couple of hundred more than it came with the same thing. So we have got, compared to the 5-year average, 41% more listings and 25% over the 10-year. So there should be tons of listings, except there's not. There's a lot of garbage and there's a lot of condos. But if you're looking for a nice semi somewhere, if you're looking for a link, or if you're looking for a detached house, then you got 3 to pick from. One of them's crazy, one of them's in bad shape, and one of them's got a tenant that won't cooperate with you. And then
Okay,
the
but
other one
this
that comes on
okay,
the
but
market doesn't want to see offers for a week.
I have to interject here because no, Robert, you nailed it right on the head. Because when I'm like, Robert daily digests these numbers. I look at it periodically, and then of course whenever we bring it up on real estate chat. But right there, right then and there, basically, when you said it, that when you look at your favorite app that you're looking or realtor.ca, you don't see the detached. You're right. You don't see the single freehold. And so I was wondering, how is there a glut of inventory when you're not seeing inventory, right? And so, Robert, do you foresee that problem or that challenge in the market being fixed? Because, detached homes, freehold homes, semis, townhouses, whatever are moving. We see the segment of the condo market is faced with a huge challenge. So where do you see that the equilibrium coming, I guess, for the freehold?
The market is led from the lowest price point. So whatever happens with condos is going to happen to semis, it's going to happen to detached. However, if there's not a glut of grandma and grandpa putting their house up for sale where they've lived for 27 years, 57 years, then it's not going to change. And grandma and grandpa got nowhere to go. Grandma and grandpa do not want to pay $7,000 a month to live in an old age place that's nice. So it's going to go lateral. It's going to go lateral. And whoever couldn't afford all these things will shake themselves out. But there's no collapse. No, there's no collapse. Okay, so here's a number of months of inventory. This is how we can correlate everything. And it was higher, it was lower, 2.5 months. Now, 2.5 months, we'll look at a chart some other time by Ron Hoth, who has got going back to 1990 when there was 18 months worth of inventory on the market. So this is not the crazy boom where it was 1.5. It's not slow time, which we say is 4 months, but it's somewhere in the middle that there's not enough to drive the prices down, inventory to drive the prices down, and there's still enough sales to keep the prices up. It's a balance.
And that's the unique thing about this market is that everybody's scratching their head and wondering, despite the rates having jumped as high as they have, how come prices are still sustaining, right? And so the explanation there is a mix of inventory, a mix of what's available, and a mix of the like buyers and sellers that are entering the marketplace.
Correct, correct.
So last but not least,
Okay, so here's our everything that comes out to 100 peak, and then where have we been since then? We've just passed 2 years out from the peak, and all this year we saw the lowest point on that red is December, then January jump, February, March. Here we are. How long will the prices from this because we had a market anticipating that interest rates were going to drop, and so it was become more affordable. Will that continue? We are still not breaking the 90 percent from peak. And in 3 of our 4 past models, every one of 3 of the 4 had passed 90% on or before the 24 months. So now we're at 24 months. We're not quite there. So will we see a slight fade in prices? Are we going to follow out to where we get to 70% after 7 or 8 years? Is it going to go down to 80% from the peak? Well, we don't know that yet. But we've had a rally, and it may last and it may fail.
Conclusion.
Conclusion. April is too early to decide on the year. Interest rates are going to disappoint all of the people who thought they were going to come down. Interest rates at 5%, interest rates at 4% for a 5-year first are the dream come true, best you can expect in the next little while. Let's call it 5 years. So do your planning based on that and accumulate down payment and look hard at the ones that come up for sale in the neighborhood of your choice. The neighborhood of your choice may have to expand. The neighborhood of your choice, you may see a few more properties come up for sale as someone decides they won't renew the lease on somebody, or someone moves out and now they have an empty property and capital gains threaten. Maybe it's not even going to happen. Let's hope that they don't pass that capital gains nonsense this year.
So
A lot of things in flux. There's no way to say, apart from what we've said, is the market is intense, but 30% off what it normally is for both buyers and sellers. But it's still intense, and prices are not dropping.
Right. So, as we said, spring market over, heading into summer markets, anticipating interest rate drops, inventory starting to swell up, and it's just a matter of how much inventory in what category of
In what
homes,
category?
what
Compared to
category,
what? Yeah.
compared to what. And so make sure you're doing the right thing. If you have any questions about how to navigate this market, reach out to Robert, reach out to myself on the comments here. Thanks for sharing. Thanks for watching. Please share this episode. Thanks for watching and take care. Bye for now.
Thanks a lot.